Hello, traders. Cousin Vinny coming to you from theclosingprint.com, Monday, the 15th of January, with your weekend video newsletter. In this edition, we'll talk about earnings. We have Goldman Sachs and Morgan Stanley reporting on Tuesday morning. Last week, we had weakness in regional banks and retail. Finally, as we start the week, the S&P 500 has been trading in a very narrow range between 4750 and 4800, with gamma still moderately positive, something to consider as we start trading on Tuesday. S&P 500 still in positive gamma territory, with price action staying right between 4750 and 4800 into Friday. RSI remaining above 50, breaking this downtrend, important in and of itself. And volume pretty much sideways, with stochastic and MACD trying to turn last week. As growth stocks began a rally to start the week, value continues its consolidation right above the 21 EMA. While tech didn't overly impact market direction as price action continued to move sideways, in this case with the S&P equal weight index, we did see the number of stocks above the 50 and 200-day remain embedded at the highs, indicating there is still a lot of positive pressure in the markets as earnings unfold again this week, and consolidating in the short term while the longer term remains very resilient, as we talked about in last week's video with the S&P 500 compared to the the commodity index, where previous turns, like back in 2003, led to a multi-year rally, as price action remains above the 50 and 200-day. Short term, it's really dependent on how earnings are perceived and how market participants react in the next couple of weeks. Again, with all the Middle East tensions and concerns around the world, you would think there's a lot more instability and worry, which would impact gold. The latter bounced last week. However, the ratio between stocks and gold has changed to reflect a leaning towards stocks, despite earnings and despite all of the negative news that we see in the markets. This crossover on the monthly time frame, similar to what we saw back in 2003, 2009, 2012, and 2020. We'll most likely see this continue higher. Big cap tech did manage to close near the highs of the week, with the exception of Tesla, with stocks like Meta and Microsoft finishing at 52-week highs, and the latter breaking out of a 6-week base with about a 20-point measured move, MACD turning, and volume showing institutions have picking up shares, with a put credit spread initiated on both in the latter half of the week. At the same time, stocks like NVIDIA showed incredible strength, finishing near all-time highs, with volume punctuated by institutional accumulation, and MACD showing that the bulls have control. The caveats this week are the fade that we saw in small caps and earnings from the big banks, namely Goldman Sachs, Morgan Stanley, and U.S. Bancorp, along with Schwab on Wednesday, and State Street Bank on Friday. If you're bullish equities, you want to see small caps catch a bid and volume pick up like it did in November and December, rather than selling like we saw for the last couple of weeks. With bond yields tapering off again, the bulls could have a tailwind should that continue, along with the obvious strength in junk bonds and high-yield corporate, threatening a breakout. At the same time, bonds are finding a support level at the 200 period moving average with stochastics turning, MACD set to turn as a function of price. If we can get a follow through with yields moving lower, bonds should push higher. We could see TLT retest the 100 level if all goes well with earnings this week. While we look for the dollar to stay in this range, if it does continue to push higher, that would be one of the caveats for the week. If the dollar has strength and manages to retest the 50 and the 200 day, as we can see, crossed over on Thursday, lending to a potential test and rejection, creating a series of lower highs, something we'll be looking at later in the week, perhaps on Wednesday or Thursday. Crude oil, on the other hand, has been consolidating for the past 6 weeks between $75 and $85 per barrel. With precious metals remaining range-bound, gold did manage a bounce last week. Momentum indicators are starting to turn. After several days of selling, it looks like shorts covered, and we could be headed back to 2100 in the short term. With most commodities weak, as we can see with the Deutsche Bank Commodity Index Tracking Fund, in its 6th week of consolidation at the lows, notwithstanding a fade that we've seen for the last couple of weeks in copper. The importance here is that this is an economically sensitive metal. We'd like to see this moving higher, not lower, if we're bullish equities and the economy overall. So this is something that we need to keep an eye on. It could be that we're marking out this range, which could be tested down there at 350 and then bounce back towards 400. It's hard to say, but for now, this is a bearish headwind for economic prosperity. As previously mentioned, we have Goldman Sachs and Morgan Stanley reporting in the morning. Regionals were fairly weak. They dropped below the 21-day with the potential to test the 50-day. With similar weakness in the retail sector, dropping below its 21-day most of last week, with volume picking up over the last few weeks to cap off a nice run that we've seen since the late October reversal, marking out most likely a consolidation and not a full-blown drop in the retail sector, something we will be watching during earnings season over the next few weeks. Biotechs were resilient, even though they didn't close at the 52-week highs. We were right in the middle of a 3-week range, with a similar appearance in real estate, moving sideways but not dropping below the 21-day. Transports testing its 21-day moving average, with momentum indicators turning. With semiconductors showing strength, volume shows institutions were helping with semiconductors moving higher. Materials were weak after a 3-week fade. Momentum with MACD continues to point south. Volume indicates institutions were taking profits after a nice run up from late October, capping off the most recent leg higher with consolidation, not a full-blown sell-off, as it tapered off from its peak to end the week. With strength noted in the communication stocks like Google, Meta, and Netflix. Financials sideways at highs, most likely going to be determined by some of these big banks. JP Morgan reporting last week, not signaling a warm and fuzzy feeling after that run-up from October, capped off that rally with a very bearish-looking candle once earnings were digested. Volume was well above average, and all of the momentum indicators are pointing to a potential retest of the 21-day in the short term and a possible test of the 50-day, perhaps punctuated by Goldman Sachs and Morgan Stanley in the morning. We'll see how the financial sector fares and their impact on some of the sectors like industrials that have been moving sideways as well. Still above its 21-day, RSI above 50. Volume tapered off on Friday, with tech the shining star last week. Software, semiconductors, hardware, cloud, and security stocks signaling that institutions have been buying these groups. Finally, we ended the week with consumer discretionary, a sector you want to see moving higher if you're bullish equities, not lower. Closed below the 21-day, signaling a potential test of the 50-day for starters, with RSI below 50. Volume picking up 2 weeks ago, starting to taper off. So we might be able to hold this off. It all depends on what the bulls and the bears do this week, with some of these consumer discretionary stocks reporting over the next few weeks. Tesla being one of the big ones, having a bad week, punctuated by elevated volume. Most indicators are oversold now. Sentiment is very negative. So if we get a bounce in Tesla, that would be awesome. If you're bullish, for starters, I need to see some elevated volume in the opposite direction and a base form if Tesla is going to have any kind of resilience here and form a base to help the consumer discretionary sector, along with what we were seeing last week in builders. Some of the builders reporting good earnings so far. So keep an eye on this sector as well as we begin the third week of trading for 2024. IBD 50 stocks, many of them above their 21-day and 50-day moving averages, something I would be focused on primarily, especially those that have recently tested the 21-day moving average and moved back through, like Braze Inc., with a recent beat in earnings by 72.73%. Its revenue is growing at a 33% clip from a company that is an intermediary between customers and the brands they love. Considering the retail sector finished on a downbeat last week, volume picked up, and momentum indicators suggest we could see a follow-through and a retest of the highs. Breaking out of this descending channel, RSI showing strength of trend, and something to watch on Tuesday. Datadog had a similar follow-through, pushing through the 21-day on Tuesday last week. With the appearance of strong price action, many of you had mentioned this early in the week. Strength being punctuated by volume and momentum indicators turning, with RSI rising, showing you strength of trend, was improving throughout the week and finishing with a potential test of 52-week highs. Back in November, the company beat by 14.29%, with revenue growing at 25.43% on a year-over-year basis, and earnings growth in the company projected as 122%. One of the main reasons this stock continues to show up on the IBD 50 week after week. Companies like Palo Alto Networks identified early in the week. Though I did miss the entry, I believe some of you did take this on Tuesday with a really nice follow-through. RSI is showing strength, muscle. Volume showed that institutions were picking up shares. MACD and stochastics rising, perhaps lending to a consolidation above 318 before continuing higher. Hard to say. We'll just be watching Palo Alto and stocks in the group like CrowdStrike finishing at the highs. Volume showing institutions have been picking up shares over the last 6 weeks. Companies like Qualsys with earnings over a month away, beating expectations last time around. The company shows 84% in its earnings growth going forward, while revenue grew 13% on a year-over-year basis in its last report in November. Company beating expectations by 30%. Qualsys also in the cloud security and compliance solutions industry, protecting their clients' IT systems from cyber attacks in an ever-increasing hostile environment. Deckers Outdoors performing very well, pushing through the 21-day. The latter flattening out a bit as volume tapers off, indicating we could see some consolidation just north of 700. Additional stocks like Mercado Libre, Meli, hosts an online commerce platform in Latin America. Think Amazon/Craigslist for Latin America, enabling e-commerce for its customers. breaking out the new highs. This is also on the IBD swing trader list again last week, with volume picking up on Friday, and the company reporting the 1st of November, revenue growing at 39.78% on a year-over-year basis. The company's earnings growth, again, at nearly 180%, shows the company is growing at a rapid pace, something to consider if you're looking for growth stocks that might follow through into earnings this week. The company reports again on January 31st. ServiceNow reports on January 24th, 7 trading days from now. Another company that provides cloud-based solutions to define, structure, and manage, automate services across the enterprise for its customers, breaking out to 52-week highs above 720 last week. Volume shows institutions have been picking up shares. Yet another company in the tech arena with revenue growing at double-digit rates, with projected earnings growth doubling into the next few quarters. Finally, we have Workday in the IBD 50 this week, a company providing enterprise cloud applications for finance and human resources. Last week, breaking out of a 6-week consolidation. MACD and stochastics pointed to higher prices, while RSI shows the strength of the trend is improving and not fading. While earnings are picking up this week, there are many stocks that are oversold already. Look at stochastic and stocks like Dyno that produces high-value light oil and gasoline products, along with renewable diesel in the independent energy industry group, reversing with stochastics rising. Emerson Electric, along with country ETFs like Mexico and Brazil, retesting their bullish 21-day moving averages, with stochastics oversold and turning, volume picking up, indicating these two Latin American countries could see a follow-through this week. With stocks from the aerospace and defense sector catching a bid after a little dip last week, we saw a bounce on Friday on a reversal candle in General Dynamics, reporting again on January 24th. In its last report on October 25th, the company beat expectations by 5.56%, revenue growing at 6% on a year-over-year basis. Again, these are stocks that are oversold, stochastics potentially turning. MACD will turn in the next couple of days as a function of price, but you can see that the trend, the 921.50, 200-day, are all up and to the right, with RSI pointing to strength of trend, persistent strength of trend. L3 Harris Technologies, last time around, beat earnings. It reports again on January 25th. Company sees revenue growth of 15.76% year over year in this last report, giving us a similar reversal that we saw from General Dynamics, volume picking up. Stochastics and MACD once again are turning. RSI is rising, indicating the trend is strengthening, not fading. If you're considering longs in this particular industry group, with leaders like Lockheed Martin giving us the same appearance, a little bit stronger price action, trying to break out the 52-week highs, stochastics turning at 50, while RSI shows strength of trend has been persistent, remaining above 50 since the stock jumped above the 50-day back in the first week of October. Northrop Grumman, similar look, looking for a breakout of this range. Finally, if you're looking for stocks that are changing direction and showing signs of renewed strength, look no further than the stocks on this list from the stochastics bullish reversal scan. All of these stocks following through, looking very strong to start the week, and most likely adding to the watch list for stocks to consider in this third week of trading for the new year. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter for January the 15th, 2024. I'll send out a watch list around 12 o'clock midnight on the East Coast, around 9 o'clock on the West Coast, so be sure to check your email and your inbox for that. As we cruise into earnings with the big banks, Goldman Sachs and Morgan Stanley reporting tomorrow, it always behooves us to start with a bit of caution and see what institutions plan on doing through volume and price action to start the week. Take care, and we'll see you in the morning.